Hello and welcome back for another Agix price prediction update, and in this video I'll be diving deep into the technical analysis here on the Agix chart. And before I do so, show some love by first giving this video a thumbs up, subscribe to the channel, and also check out the channel membership. And in my previous videos I focused on chart patterns here on the Agix chart that gave us massive breakouts to the upper side. And the first one was this double bottom, having our common bottom at around the $0.22773 mark, which is a chart pattern that broke to the upper side, and its minimum target area at around the $0.29424 mark we fully maximized. We also saw a breakout out of this ascending channel that we had been trading within, in a move that gave us that massive breakout to the upper side, where you can see that we saw a high at around the $0.325 mark. And after seeing that high, you can see that we have been seeing a bit of a corrective structure to the lower side, and on the charts we were able to print this long wick to the upper side, which was the first indication that the sellers, that is the buyers, were losing momentum and the sellers had started to take over the market once more. And using the Fibonacci's, connecting them from our low down here at around the $0.22 mark to that high that we made, I can give you a target area basing it on the Fibonacci's between the Fib level 0.5 and the Fib level 0.618, and I can mark that target area here on the charts like that, which lies between the $0.27625 mark and the $0.26452 mark. And this is a very significant area that we need to continue watching, because Agix, if it continues with this corrective structure over here, we need to continue holding within it. And if by any chance we lose this yellow target area to the lower side, then that would be suggesting something else here on the Agix chart. And before I give you the alternative scenario in case we lose this yellow target area, I want you to first understand what I'm expecting here on the Agix chart on the long-term point of view, basing it on the Elliot structures. And I believe that is better seen here on the 4-hour chart. So jumping to the 4-hour chart for further analysis, and to first give you my long-term point of view basing it on the Elliot structures. Here on the 4-hour chart you can see that Agix, from these low prices that we had been trading within, we saw that massive run up to the upside in a 5-wave move, having the wave 5 giving us a peak at around the $0.67 mark, in a move that completed the formation of that first wave to the upside. Then we started a corrective structure in the formation of this wave 2, and using the Fibonacci's, connecting them from the low of the first wave to the high of that wave 1, that gave me a minimum retracement area for that wave 2 between the Fib level 0.5 and the Fib level 0.78, which is a target area that lies between the $0.35 mark and the $0.17151 mark, which is the area highlighted in blue. And because of the corrective structure in the formation of that wave 2, I also expected to see an ABC corrective structure, which also played out, having the wave C giving us the low at around the $0.22 mark. And that now means that we have managed to do the minimum that we expected it to do in the formation of that wave 2, and there are high chances that whatever we are seeing is the start of a massive run up in the formation of this wave 3. And in the formation of this wave 3, which is impulsive, we can also expect to see a 5-wave structure in formation, having the wave 5 fully maximizing our target area. And if I zoom in on the charts, there are chances that whatever we are seeing on the Agix chart is that start of that 5-wave structure to the upside, where we can term this as a first wave, having the wave 1 giving us the high at around the $0.325 mark. And there are chances that the corrective structure we are seeing at the moment is the formation of that wave 2 before we can expect a wave 3, then a wave 4, and then a wave 5 to the upper side. And if that is the case, then using the Fibonacci's, connecting them once more from the low of the first wave to the high of that wave 1, you can see that the minimum retrace for that second wave is between the fib level 0.5 and the fib level 0.618. And in case we continue holding within that yellow target area, once we retrace into that yellow target area, then there are high chances that Agix is going to recover in the formation of that wave 3. But in case we continue seeing further breakdown, and maybe at some point we even lose the fib level 0.78, which lies at around the $0.24906 mark, then that will be suggesting one more new low within this blue target area in the formation of that larger Elliott wave count 2, before we can start another massive run up in the formation of that wave 3. So that is what I'm expecting here on the Agix chart. Continue watching the area between the $0.2773 mark and the $0.249 mark, which is an area that we need to continue holding for us to still consider these as the formation of this wave 2, before we can expect another run up in the formation of that wave 3. And in case we lose the yellow target area, expect a reset of the low that we made at around the $0.22 mark. And also taking a look at the indicators here on the RSI, we are trading at around the 53 mark. Also taking a look at the MACD, we have been able to print a bearish cross suggesting further breakdown. So let's be patient and see how that plays out, and I'll be keeping you updated.